welcome. This is Business Edge on News Central. I'm Tolulope. Adeleru Balogun. Our headline story for this Friday edition: African finance ministers to discuss payment systems for AfCFTA. And right before we wrap up the show, I'll be bringing you NC4 to watch, a few stories we're keeping our eyes on. Again, this is Business Edge. Welcome. And straight to our headline story now. African ministers are to discuss payment systems for AfCFTA, which is a new payment system for intra-African trade that is in the works. The African Union says its specialized committee on finance, monetary affairs, economic planning and integration will discuss the launch of a payment system for the African Continental Free Trade Area Agreement from December the 1st to the 3rd. The African Union explained that the meeting will hold before the planned deadline on the ratification of the agreement on December the 5th. The African Continental Free Trade Area Agreement is one of the biggest free trade agreements in the world right now, with a potential market of 1.2 billion people and a combined gross domestic product of $2.5 trillion. The AU's continental payment system, when completed, would help to ease payment integration in AfCFTA countries. The theme of the meeting will be securing Africa's taxing rights, stemming illicit financial flows, and developing payment system for AfCFTA. The AU disclosed that it would be a major step towards the Agenda 2063 for Africa. They also added that the meeting will discuss implementation of Aspiration 1, which aims for continental inclusive growth and development. They will also discuss how to prevent illegal capital flight and tax challenges surrounding the agreement due to the rising African digital economy. Now, joining me to discuss issues around AfCFTA, I have Andrew Mould. He is the Chief Regional Integration and AfCFTA Sub-Regional Office for Eastern Africa under the United Nations Economic Commission for Africa. Andrew, thank you so much for joining us on Business Edge.
You're welcome. Yeah, good morning.
All right, so AfCFTA is kicking off in a few short weeks, 10 short weeks as it is. And a lot of people are wondering whether the continent is ready. Is Africa ready? Or do you think in the course of the work that you've been doing that some regions or some countries are just a bit more ready than others for AfCFTA to kick off?
Well, I think actually we've only got 6 weeks really now, haven't we? It's the 1st of January.
Yes, true.
So yeah, things are progressing very rapidly. So we're getting a larger number of ratifications. As you're well aware, Nigeria has come on board, and I think the African Union is very happy about that. West Africa is actually doing surprisingly well in terms of the number of ratifications. Eastern Africa, we're starting to catch up. In total, I understand that there's around 34 countries that have ratified and around 29 or 30 that have actually deposited those ratification documents with the African Union. So, progress is going in the right direction. I would stress that this is going to be a process, that it's not going to be immediate. So, things come into force on the 1st of January, and actually we're going to see countries liberalizing gradually over a period of 5, 10, 15 years, depending on the level of income of the country. So for LDCs, for example, they have a 10-year period to reduce 90% of those tariffs on intra-African goods. So, I think we're going to see a gradual implementation. It won't be a big bang on the 1st of January, but over the course of the next decade, we're going to see a fundamental change and shift in intra-regional trade.
Okay, so you mentioned Nigeria, you mentioned West Africa in terms of how some countries, of course, with about 34 thereabouts being ready for this. But we've also seen a move towards a bit of protectionist policies that are being opposed somewhat across the continent, and we've seen that also across the globe. Nigeria has that issue with the closing of the land borders, even though we've heard recently that they may soon be reopened. So where do we place that? Something like Nigeria closing the land borders and now saying they may soon reopen them, with a move towards integration of trade, not just regionally, but across the continent. We know that Nigeria is part of ECOWAS, and it was many countries involved and affected that Nigeria closed its land borders too. So what do we see in that regard? And do you also think that because AfCFTA is coming on board in January, that's one of the things where we're seeing Nigeria start to say, oh, we're going to soon reopen our land borders?
Well, I think we're always going to see some localized problems.
Continue, Andrew.
We're also going to, sorry, if you can hear me, yes. We're also going to see some localized problems in terms of trade disputes, local, regional ones, sub-regional ones across the African continent. But I wouldn't say the African continent is moving towards a protectionist kind of stance. Actually, I think the problem's more been at the global level between the United States, China, European Union. And now with this new US administration, hopefully the multilateral and the global system will also start to move in the right direction. But I think, there are cases like the one you're mentioning in Nigeria, in East Africa community. There have been occasional problems with non-tariff barriers and the like. But the general direction of travel in Africa is definitely towards more liberalized trade. And the AfCFTA is a big sign of that.
Liberalized trade. This is the second time you've mentioned liberalization. And I think that's a big thing for you and many people who are involved in AfTA. So let's expand on that. When you mention liberalizing trade and liberalization of the economies, what are we really aiming for under AfTA? Even as you said earlier, this is a process that we're going to see come on board and sort of see more of the consequences and the results of it over the next decade and more.
Yeah, well, I think it's important to stress that this is a selective liberalization. Okay, it's not a unilateral or multilateral liberalization. It's opening up to other African trading partners, and that's quite different, I think, from multilateral or unilateral liberalization with the global economy, because a lot of African countries have clearly had some fears about opening up to, countries with very high levels of productivity. A much better resource bases, such as the European Union and China for the land. But this is quite different because it's opening up to competition within the continent. So, I'm generally very hopeful, and I think our organization is, been very supportive of this process since the beginning, precisely because we see that there's a lot of potential gains for the continent in terms of developing regional value chains across the continent, where the continent has been quite weak in the past, for example. It would be healthy competition rather than competition that would risk, causing problems at the national levels because countries are not able to compete on the global scale.
Okay, so you're mentioning value chains and takes me to my next question. Now, the value chain of many industries in the continent are not so well developed, and many have expressed concern that opening up trade like this could affect homegrown industries. But I know one of the instruments under AfTA also has to do with the origin of a product. So what do you say to those who are worried about this? Is there enough protection and enough regulation within AfTA that we're going to be sure we don't kill homegrown industries in different African countries?
Yeah, well, as I said before, because it's a selective opening, it will increase the number of opportunities for the evolution of these regional value chains. Now, it's definitely true currently that the sourcing of intermediate products is not done sufficiently within the continent. We're quite heavily dependent still on extra-regional value chains from imported intermediate products from China, for example, India, Europe. But that will change over time with the AfCFTA because there is a lot of productive capacity at the continental level. It's simply that countries are not sourcing sufficiently from within the continent. So by removing those tariff barriers and also the non-tariff barriers, you give the opportunity for companies to source increasingly more from the continent. And as I said at the beginning, Mark, it will be a gradual process. It won't be a sudden change, but it will over the period of a decade. I think you'll find companies looking for sourcing opportunities across the continent much more intensively.
Okay, that makes us...
Go ahead. Because of the reduction of these barriers, precisely because of the reduction of these barriers. And also because the AfCFTA is not only about merchandise trade, it's actually about also services liberalization, for example. The business services, for example, across the continent will become more efficient and help in terms of productive capacities across all the continent.
Okay, that makes sense. Now, there's something we've been talking about on Business Edge, and that's been an issue of the debt burden across the continent. The debt burden for many African nations has become alarming. We've seen the situation with Zambia, which has unfortunately defaulted. And there are analysts who are afraid that other African countries may not be too far behind in the context of, again, given the COVID crisis and how it has affected countries' economies and their ability to either pay their debts and even just keep themselves afloat. The International Debt Statistics Report 2021 from the World Bank showed that between 2009 and 2019, countries in the East African region increased their external borrowing by nearly 4 times. That's from $19.9 billion to $73.8 billion. In terms of debt and AfCFTA coming on board, could we see debt consideration becoming part of trade deals and conversations? How do you think this debt crisis that seems to be looming on the continent could affect AfCFTA?
Yes, well, you're quite right to flag this because, I think there's a growing realization that debt levels have risen too sharply in recent years. It is a global problem again. It's not just a regional one or African specific problem. If you look at debt levels in high income countries, they are of course much higher than those that prevail across the continent. So even the United States, it went into this crisis with a debt to GDP ratio of around 110%. And of course, subsequent to this crisis, you'll find a lot of high income countries with really high levels of debt. The problem for Africa, of course, is the capacity to repay is relatively limited. So export revenues, for example, are lower. Interest payments on a lot of that private debt are much higher than they are that prevail for industrialized high-income countries. Now, I focus principally on Eastern Africa, and we're monitoring quite closely the trends for the 2 largest economies in this region, which is Ethiopia and Kenya. And in the Kenyan case in particular, there are some reasons for some concern a little bit about debt levels because interest payments alone are accounting for currently around 30% of government revenues. And clearly, when we're talking about coming out of this COVID-19 crisis, there's a need for a fiscal response and there's a need to maintain government spending relatively high. But there is this fiscal pressure because 30% of revenues are going currently to interest payments. And if you add on return of principal, it's around 50% of government revenues going on debt repayments. And that's clearly too high. Now, you're probably aware of the debt service suspension initiative, which ECA, along with other organizations, has been championing. We do believe that there's a need for a pause at the current circumstances with fiscal revenues collapsing because of the crisis, the COVID crisis. There's a need for a pause in some of the repayments. Some countries have gone on board. So, for example, Ethiopia is estimated to have saved over $400 million through becoming a member of this initiative. Whereas other countries, such as in our region, Kenya or Rwanda, they've not been so keen, precisely because they're concerned about the impact on private lending for the future. They're worried about their future ability to go to the markets to take on further debt. And we understand those concerns. However, I think it's something that has to be negotiated collectively because the problem, as I said, is a really serious one at the global level, not even at the continental level. So there needs to be a collective response rather than individual countries try to get themselves out of these difficulties.
Do you think the world is going to be responsive? Because we have seen, I know Cyril Ramaphosa, the South African president, and many others are saying that Africa needs the debt relief. They need the break. They need the time out. And with the initiative that you're working on with Eastern African countries, we're seeing some movement. But do you think those who hold African debt are going to be responsive, given what we saw with Zambia and people saying, no, you need to go ahead and follow the terms of the agreement as it was? So do you think the world would be responsive in terms of giving Africa a break on its debt?
Well, in a sense, it's in their own best interest as well. So, for example, we've seen China come on board with this initiative for debt suspension, and that's very important because China plays such an important role in the absolute amounts of outstanding debt for many countries, Zambia being one, Kenya being another example. So I think it's also in their interest because clearly debt suspension doesn't really benefit anybody, does it? Globally, the attention is all going to be what happens with the high-income countries because their debt levels are much higher than prevail on the African continent. In absolute terms, of course, their debt is, outweighs the total debt of the African continent by multiple times over. So there is a global problem with this, and it will be interesting to see the developments now that we have a new American administration, US administration coming on board. They may have a more, let's say, collective response to this than we've seen under the previous administration. So that will be interesting to see.
Okay.
But as sorry.
No, go ahead, Andrew.
No, I was saying, I think it is again something where there's strength in numbers, so a collective position on this is important because Zambia is not an isolated case by any means. There is concerns that debt levels have gone too far, they've gone too high for a number of countries across the continent, and so it's a shared problem.
Okay, Andrew, we're going to take a quick break now, but when we come back, we'll continue this conversation. As we continue to look at AfCFTA, we are less than basically a month away, January the 1st, 2021, where AfCFTA will kick in, and we'll continue our conversation right after this. This is still Business Edge, and I still have with me Andrew Mole, Chief Regional Integration and AfCFTA Sub-Regional Office for Eastern Africa under the United Nations Economic Commission for Africa. Now, Andrew, we've seen the European Union and Britain engaging in direct trade negotiations with individual countries and even regions. What do you think the impact of this could be on the collective trade, especially as we're going towards what is now supposed to be the world's largest trading bloc? So does that have any bearings on the future of AfCFTA?
That's a very good question, actually. It has caused some concern in some quarters. I think that there's this ongoing process of bilateral negotiations with big countries, big economies in the world, such as the US and the United Kingdom currently. The US case is a particularly interesting one, I think, and it reflects concerns that AGOA is due to expire in 2025, and so countries are looking for a further prolongation of their preferential access to the US market. Now, the AfCFTA isn't a customs union, it is a free trade agreement at the present time, although there is the aspiration to take it to a customs union where there would be a common external tariff across the African continent for goods coming into the continent. But that's not on the cards immediately, and the current situation is a free trade area. So that does allow countries to negotiate their own trade deals with third-party countries such as the United Kingdom or the US. But this is where the issue of rules of origin, which you mentioned earlier, actually kick in. It's very important that those rules of origin are as transparent and as easy to apply as possible to allow the intra-African trade to flow to its maximum amount. And the idea of the rule of origin is, of course, to avoid too many goods coming in from third parties outside the agreement, and taking advantage of the free trade area in a way which wasn't initially intended, because it's to give preference to African producers and not to producers outside the continent. So these have been concerns, for example, for Nigeria behind its reticence to, sign up early to the AfCFTA and then ratify, because of those concerns in some sectors about transshipment of goods coming from outside the continent. With good, well-articulated rules of origin, those fears should be minimized. So it is very important that those negotiations are concluded successfully. But as I said, for some parts of the continent, they already are in regional blocks. So, for example, for Kenya, the fact that Kenya has been negotiating with the United States on this matter has caused some concern on the part of other members of the East Africa community, because they already have established a customs union. And so there are issues which need to be worked out with partners. And I'd also raise the issue there also of the additional clauses that go in these trade agreements, because it's not just about trade access. It's often there's things about reciprocal treatment of investment, intellectual property and the like. So, it's not something that we need to be too alarmed about. It is something that's allowed for under the AfCFTA regulations come into place, but you wouldn't want too many countries striking too many trade deals simultaneously when the emphasis is supposed to be on liberalizing the intra-African trade.
Okay, we'll be wrapping up very soon. Now, the 5 operational instruments of the agreement include the rules of origin, the online negotiating forum, the monitoring and elimination of non-tariff barriers, a digital payment system, and the Africa Trade Observatory. So we are just weeks out from AfCFTA kicking off. Are all of these in place? Everything is tested and ready to go, ready to be, I guess I would say, released to the public or made open to the public. Where are we? Where do we stand on the readiness of all of these necessary instruments?
Okay, Tolulope, you know, I'm actually based in Kigali. I'm not based in Addis Ababa, so I'm not privy to all the conversations of the African Union. My colleagues in Addis do follow these negotiations very, very closely. I am aware that there's still quite a lot of things pending. So, for example, the rules of origin negotiations still haven't been completed. We're moving into the phase 2 of negotiations. Quite a lot of countries have already put in place their offers on services trade, for example. I'm aware of at least 5 countries out of the 14 of Eastern Africa which have already put a draft proposal forward, but there's a lot of work to do. And as I said in my opening remarks here, you know, this is a process, it's not an event. So it will take place over a period of a decade or so. And so we will gradually see a lot of these questions and issues resolved over the course of the next few months and few years.
Okay, we'll end it there. So even though you think you didn't have enough information, you did have some information for me with that question. Thank you very much, Andrew Mould, Chief Regional Integration and AfCFTA Sub-Regional Office for Eastern Africa under the United Nations Economic Commission for Africa. We look forward to talking to you again, especially when AfCFTA does kick off and as more information comes out and we see updates and developments on the agreement. Thank you very much, Andrew. All right, so we'll be wrapping things up with NC4 to watch, and these are a few stories we are keeping our eyes on. Nigeria earns 416.01 billion naira from company income tax in Q3 of 2020. The country has earned that amount from company income tax in the third quarter of 2020. This was revealed in the company income tax by sectors report, which was recently released by the National Bureau of Statistics. According to the report, the total CIT generated increased by 3.48% in Q3 2020 compared to 402.03 billion naira recorded the previous quarter. It reduced by 20.13% compared to 520.89 billion naira recorded in the corresponding quarter 3 of 2019. The World Bank raises a red flag over Kenya's bulging public debt, and this was also part of the things that Andrew Mould mentioned. The World Bank has warned that Kenya's rising public debt could reach distress levels if not checked. The bank urged the government to seek debt relief from external lending institutions and development partners. The multilateral institution is recommending that Kenya make use of available international debt service relief and other debt optimization strategies to release the needed fiscal space. Central Bank of Kenya holds benchmark rate at 7%. Now, the CBK has left its benchmark rate unchanged at 7% for the 5th time this year. This came at the end of its Monetary Policy Committee meeting. Now, according to the CBK, the current rate is having the intended effect on the economy from its initial implementation in March. Central Bank Governor Patrick Njoroge noted that inflation has remained within the target range of 2.5% and 7.5%. Inflation is expected to stay within the range in the near term, supported by lower food prices and muted demand pressures. And finally, Morocco-Italy port authorities are exploring means to boost trade. The port authorities of Casablanca, Morocco, and La Spezia, Italy, are exploring innovative means to facilitate the flow of goods. The new measures are in line with the innovation program of the National Ports Agency and the European FINEX project. A joint press release from the two ports said the primary goal of the program is to improve and simplify import and export procedures between the ports of Morocco and the ports of the European Union. And that's it on this edition of Business Edge. As always, thank you so much for joining me. You can get more business and financial news on our website and also follow us on our social media platforms. Until next time, I'm Tolulope, Adeleru, Balogun.